Struggling with blood sugar levels, ready to shed those extra pounds effortlessly? Look no further. Sugar Defender, the #1 rated blood sugar formula, is here to transform your health and help you achieve your wellness goals. Click the link in the video description to get started with Sugar Defender today.
The Bank of England paved the way for a summer interest rate cut yesterday after inflation fell to its 2% target. Members of the Monetary Policy Committee, MPC, voted by 7-2 to leave interest rates at 5.25%. But the bank revealed that, though it chose to hold the base rate at a 16-year high, it was a knife-edge decision. The announcement will revive hopes that the bank could vote for a cut at the start of August, relieving pressure on millions of borrowers. It is expected to give a new Labour government an immediate boost should it win the general election on July 4. Julian Jessop, economics fellow at the Institute of Economic Affairs, said the bank was wrong to leave rates on hold. There is already plenty of evidence that underlying cost pressures are easing, he added. The longer the bank waits, the greater the risk that inflation undershoots the target while unnecessarily holding back the recovery. The MPC could have wanted to avoid the perception of bias if they had surprised investors by cutting rates so close to an election. Inflation has fallen to 2% for the first time in nearly 3 years. Andrew Bailey, governor of the Bank of England, said, "It's good news that inflation has returned to our 2% target. We need to be sure that inflation will stay low, and that's why we've decided to hold rates at 5.25% for now." The bank added, as part of the August forecast round, members of the committee will consider all of the information available and how this affects the assessment that the risks from inflation persistence are receding. The language is likely to cheer markets after traders were gloomy about the prospect of a summer rate cut because services sector inflation came in at a higher than expected 5.7%. The MPC played down the figure, noting that it was driven by prices that regularly increase at that time of year, such as mobile phone contracts, broadband and water bills. Another factor being closely watched is wage growth, running at 6%. However, some MPC members also played down that figure. The bank said that for some rate setters the higher than expected services inflation reading did not alter significantly the disinflationary trajectory that the economy was on. And they noted that the strength in wage growth was driven by an increase in the national living wage, something that was unlikely to be as large in future. It added, for these members, the policy decision at this meeting was finely balanced. The minutes imply that the MPC could easily be tipped into voting for a cut later this summer. But they suggest that the decision may be close, and pile pressure on new Deputy Governor Claire Lombardelli, who is due to join the bank at the start of next month. The minutes also add to optimism about Britain's economic recovery. After better than expected GDP growth of 0.6% in the first quarter, the bank has now upgraded its second quarter forecast from 0.2% to 0.5%.